Meantime, gold and silver settling at new records once again today. Gold getting within $10 of the $5,000 mark. Silver now north of 100, and Treasury yields falling across the board. India's holding of U.S. debt falling to 5-year lows as the country looks to support its own currency and diversify its reserves. So what do these moves say about U.S. assets? And remember, the theme at Davos this past week was European officials, non-U.S. officials, officials from other countries saying, we want to diversify away, that there's a new world order here. We can't rely on the old rules anymore.
There's no question that if you were, if gold was significantly lower levels, you came out of Davos and said, I need to go buy gold. Gold's not at lower levels. Gold's at much higher levels. And so news flow aside, and as someone that's been talking about gold for years, and I expect I will be talking about it for years, we talked about central bank reserve ratios, and I mentioned China at 8% when Germany's at 80. I still think these things take gold higher. At where gold has gone, and I think big round numbers like 5,000, I think an 83 RSI, I think the over-exuberance here, I think Davos, I think Fed, I think Venezuela, I think Iran, I think all of these things mean I think we're going to see 4,600 on gold before we see 5,100. I think we're going to get a 5% correction in gold. I was selling upside calls in GDX. I'm not, again, it's a trade I'm really happy about. I think the miners continue to be more profitable, more efficient, and we're still not with the right gold price input in models that's incredibly powerful in terms of the valuation. But again, I say be careful here. It doesn't mean that long term. I think every money management firm is wondering, do we have enough gold? And I think the retail sector thinks they're very underweight gold. I think it's going higher, but I think this trade has gotten, in the short run, very short run, overdone.
Yeah, and I think everything that Tim was talking about with other countries, geopolitical, their sanctions have stopped people from moving money around, so they're using gold to do that. Diversifying away from U.S. Treasuries. China's been doing it for 12 years. Russia's probably been doing it for the same amount of time. India is doing it. It's shorter-term process in Japan as well. But when you look at supply-demand deficit, silver's the only one that you could actually, because it's an industrial metal. Mm-hmm. And they miss by about 200 to 300 million ounces per year. So if you're looking for a reason to buy it at these levels, other than emotions, silver's probably the metal that you stick with.
It's an industrial metal. And also, we were talking to John Ciampaglia of Sprott yesterday, and he was saying that there is some substitution effect because gold is so high. Indian customers, for instance, aren't buying gold. They're substituting it with silver. And I thought that was really interesting, Mike, that idea that, some prices are so high, so you go down to the next level of metal. We're also seeing that when it comes to aluminum as a substitute for copper in some applications.
Well, yeah, we have exposure in one of the discretionary funds to basically the whole complex. We've got GDX, we have GLD, we have SILJ, we have Southern Copper. I will say that at some point I'm kind of with Tim here. It's getting into this moment where I'm really looking for that downside reversal day. That's that situation where you see it gaps open to a new all-time high and then closes sharply lower. When I was back on the NYMEX, that was typically the most bearish pattern that you could see in a commodity. We do feel like there's a lot of enthusiasm. Look at SLV, the ETF. That thing traded 2.9 million options contracts today. This is something that, 500,000 contracts 6 months ago would have been a big day for this thing. So, there's a lot of exuberance, and I think that's something to keep an eye on.
Mm-hmm.
Yeah, I'm not really surprised to see BRICS players continuing to look to diversify away from U.S. Treasuries. I don't think that's new. Clearly, with the Davos announcement, I think it's like front and center on everyone's mind. What concerns me, although I do understand the fundamentals around why we're seeing a rotation into real and hard assets, this is really a hedge to your portfolio. At least traditionally, that's the way it's been pitched. And so when you're kind of seeing these parabolic moves in what is supposed to be a hedge, you really wonder if you're going to start to see like one-like correlation on the downside, where you would expect the safe haven type of trade to happen within these metals. If we see a pullback in equities and other risk assets, if you continue to see a collapse across. And I think that's slightly concerning and seemingly kind of flying under the radar.